Around 25,000 people in England die every year within 5 years of reaching state pension age. That's according to ONS data. These are people who spent decades paying national insurance, 40, sometimes 45 years of contributions, and when they go, the people they leave behind often assume the system will sort it out, that DWP will quietly calculate what's owed and pass it on. Most of the time, it doesn't work like that. There are specific amounts, sometimes thousands of pounds, that families are legally entitled to inherit, but those amounts don't land automatically in anyone's account. They sit there, unclaimed, because the person left behind didn't know to ask, didn't know what forms to request, didn't know what to look for. And then there's a separate problem entirely, one that affects millions of couples in this country who've been together for decades but never formally married. For them, the inheritance rules aren't just complicated, they're brutal. Most people assume that if you've shared a life with someone for 20 or 30 years, the law will recognize that. It won't, not when it comes to state pension, not even close. So in this video, I want to walk you through 3 specific steps to protect what's yours, or what your family is owed. Whether you're dealing with a recent loss, planning ahead, or just realize there's a gap in what you thought you knew. Because if you don't know these 3 steps, and especially if you're in a long-term relationship without a marriage certificate, there's a very real chance a significant amount of money is going to disappear into the system. Quietly, without anyone flagging it. Let me start with the rule that underpins everything in this video. When it comes to inheriting state pension in the UK, there is one qualification that matters above all others. You must be a legal spouse or a registered civil partner. That's it. That is the entire gate. It doesn't matter how long you've been together. It doesn't matter whose name is on the council tax bill, or whether you've raised children together, or whether your families think of you as married in every practical sense. If there is no marriage certificate or civil partnership registration, the state pension inheritance rules don't apply to you. This is what people call common law marriage, and it is, in legal terms, a myth. I'll be honest, I used to assume the law had caught up with the way people actually live. That after 30 years of cohabiting couples being completely ordinary and unremarkable, the system would have found some way to recognize them. But when you sit with the actual cases, the letters people receive after a bereavement, you realize the system is genuinely indifferent to the length of the relationship. It sees a piece of paper, or it sees nothing. Sarah and John are a fairly typical example of how this plays out. They'd been together 28 years, shared a house, split the bills, built a life. They'd talked about getting married a few times over the years, but it never quite happened. They weren't against it. They just didn't feel the certificate was necessary. We know what we are to each other, that sort of feeling. John died unexpectedly at 67 shortly after retiring. Sarah contacted DWP to ask about his state pension. The letter back was polite. It was also clear. Her entitlement from John's state pension? £0. Not reduced. Not means tested. 0. That number, £0, is the precise legal inheritance for a cohabiting partner under current UK state pension rules, regardless of how long the relationship lasted. Now, I want to be careful here, because I'm not saying marriage is the right choice for everyone. That's not what this is about. But there is a real trade-off being made when a couple chooses not to formalize their relationship, and most people make that choice without fully understanding what they're giving up. If you're not married and your partner dies before you, you will have no automatic claim on their state pension. What that means in practice, depending on the years they contributed and their full entitlement, could easily be tens of thousands of pounds over the course of a retirement. Gone. And here's the other side of it. There are alternatives. If you genuinely don't want to marry, there are legal steps you can take around private pensions, wills, and expressions of wish that offer real protection. We'll come to those in step 3. But right now, if you're watching this and you're in a long-term relationship without a marriage certificate and you haven't yet sorted those alternatives, please stay with this video. This is the part that matters most for you. If this applies to someone in your family, a sibling, an adult child, a friend, hit subscribe. The next few videos go deeper into protecting assets in retirement, and this is exactly the kind of thing people only find out about when it's already too late. Because the system won't warn you. It'll just process the paperwork. So let's say you are married or you're in a registered civil partnership. You've cleared the first hurdle. What happens next depends almost entirely on one date. The 6th of April 2016. That was the day the new state pension came into effect, and it created a dividing line that still shapes what surviving spouses can and cannot claim today. Which side of that line your household falls on changes everything. Here's how to work it out. The question isn't when your spouse died. The question is, had either of you already reached state pension age before the 6th of April 2016? If yes, you're under the old rules. If no, you're under the new rules. And the difference between those two positions is significant. Under the old rules, the system was more generous in one specific way. If your late spouse had a stronger national insurance record than you, more qualifying years, more contributions, you could use their record to boost your own basic state pension up to the full amount. It worked almost like a top-up. If your own record left you short, theirs could fill the gap. That mechanism no longer exists under the new state pension. Under the new rules, your state pension is calculated entirely on your own NI record. Your spouse's contributions stay separate. You cannot transfer their qualifying years to your total. If you've had gaps in your own record, time out of work, years caring for children or elderly parents, those gaps remain, regardless of what your partner contributed over their working life. For some people, particularly women who took extended career breaks, this is where the system becomes genuinely painful. Decades of contribution from a spouse simply don't carry across. What does carry across, and this is where it gets slightly more hopeful, is something called the inherited additional state pension. If your late spouse built up entitlements under the old SERPS or state earnings-related pension scheme, or its successor S2P, you may be able to inherit a portion of that. Up to 50% in some cases, depending on when they reached pension age. It's not automatic. You need to claim it. But it's real money, and a lot of families don't know to ask. There's also one rule under the new system that catches people badly, and I want to flag it clearly. If you remarry or enter a new civil partnership before you reach your own state pension age, you lose the inherited entitlements from your previous spouse. Completely. That's the rule. It doesn't matter how long ago your first partner died, or how much they contributed. The moment you formalize a new relationship before pension age, the inheritance from the previous one is gone. It's a rule that feels almost designed to punish people for moving forward. But it exists, and people walk into it without realizing. So, old rules offer more flexibility around NI records. New rules are stricter, but inherited additional state pension is still on the table if your spouse built it up. And remarrying before pension age wipes the slate. Now, even if you've worked all of this out correctly, there's still a part of the system that tends to quietly shortchange people. It involves something called a protected payment, and the complications around what's known as contracted out status. This is where the administrative side of things gets genuinely difficult, and where the real money often gets lost. Let's talk about where the money actually gets lost. Most people, when they contact DWP after a bereavement, assume the figure they're given is correct, that the system has done its calculations, pulled the right records, and arrived at an accurate number. In my experience, that assumption is worth questioning, particularly when the person who died had a complicated employment history. Here's the mechanism worth understanding. When the new state pension launched in 2016, it was built on what's called a starting amount. That starting amount was calculated for every individual based on their NI record up to that point. But for people who had spent part of their career contracted out, meaning they opted out of the state's additional pension scheme, usually through a workplace pension, that calculation involves an adjustment called a contracted out deduction. What that means in plain English, If your late spouse spent years in a company pension scheme that was contracted out of SERPs or S2P, their state pension entitlement was deliberately reduced to reflect that. The assumption being that their workplace scheme was compensating for it. The problem is that DWP's records of who was contracted out and for how long are not always complete. Employers change. Pension schemes close. Paper records from the 1980s and 1990s don't always survive cleanly into a digital system, and this is where something called a protected payment comes in. If your late spouse's starting amount, calculated at April 2016, came out higher than the full new state pension at that time, the difference is called a protected payment. That excess amount can be inherited. Up to 50% of it passes to a surviving spouse. But DWP won't always surface this automatically. If the contracted out records are incomplete or disputed, the starting amount might be understated, which means the protected payment might be understated, which means you could be inheriting less than you're legally owed and receiving a letter that looks entirely official and correct. There's a second category worth checking as well. Deferred pension. If your late spouse had reached state pension age but chose to delay claiming, even by a year or two, they built up what's called a deferred entitlement. Under the old rules, deferring for at least a year could be taken as a lump sum, with interest applied. Under the new rules, deferral adds a weekly increment instead. Either way, that deferred amount belongs to the estate, or in some cases passes directly to the surviving spouse. Again, not always flagged proactively. I was helping a client go through her late husband's records not long ago. He'd worked at a manufacturing firm from the early 1990s, and the pension scheme there had been contracted out. When she first heard from DWP, the figure looked reasonable. Nothing obviously wrong, but we went back through the paperwork. Old payslips, some of them quite fragile by that point, and on one from 1998 in the National Insurance column, there was a single capital letter, D small, easy to miss. That D was the evidence of contracted out status, and it was the basis for a legitimate correction to her protected payment calculation that she hadn't been offered. It took time. It took persistence. The Pension Service in 2026 is not a fast-moving organization. But the money was there, and she was entitled to it. So what do you actually need to gather? The NI number of the person who died. Any payslips you can find from before 2016, particularly from employers who ran occupational pension schemes, the death certificate, and if there's any chance of a deferred entitlement, you'll want written confirmation of the date they reached state pension age versus the date they actually started claiming. The form that starts this process is BR19. It requests a state pension forecast or records check from HMRC. It's not the only tool, but it's the right starting point. If you just accept the first figure DWP gives you, you may well be accepting less than you're owed. The system isn't necessarily trying to underpay you. It just doesn't have a strong incentive to go looking for the evidence that would increase what it owes. That part is down to you. Think about what that unclaimed amount could represent. A year's worth of energy bills, maybe two. Several years of council tax. It won't change a life, but it is real money that belongs to the person who earned it. Right. Let's make this concrete. Everything we've covered so far. The cohabitation trap, the 2016 divide, the contracted out complexity, it can feel like a lot of system to navigate when you're already dealing with grief. So here are 3 specific steps, in order. Each one matters. Step 1. Use Tell Us Once. Do this first. Tell Us Once is a government service that lets you notify multiple departments in a single contact. DWP, HMRC, the local council, the Passport Office, the DVLA, one call or one online session, and the relevant agencies are informed simultaneously. Why does this matter urgently? Because state pension payments do not stop automatically the moment someone dies. Overpayments happen, sometimes for weeks, occasionally longer, and DWP will come back for that money, not flexibly, not with much sympathy. They will reclaim it, often at a difficult time for the family. Using Tell Us Once quickly limits the overpayment window and protects you from that conversation later. You can access it through the government's registration of death process, or directly at gov.uk. Do not wait on this one. Step 2. Gather your paperwork before you contact DWP. Don't call the pension service empty-handed. It rarely ends well, and it often means a second or third call to provide information you could have had ready. Here's what you need: the NI number of the person who died. It'll be on any old payslips, tax documents, or letters from HMRC. The death certificate. Any documentation showing when they reached state pension age, and critically, when they actually started claiming. That gap is where a deferred entitlement might exist. Then, if they worked for an employer with an occupational pension scheme at any point before 2016, go through whatever old payslips you can find. You're looking for the National Insurance category letter in the deductions column. The letter D, or in some periods F, G, or S, indicates contracted out status. That letter's your evidence. Without it, DWP has little reason to revisit a protected payment calculation. Submit Form BR19 to request a state pension records check from HMRC. It's the right starting point. And follow up in writing where you can. The pension service is slow at the moment, and a paper trail matters. Step 3. If you're not married, sort your private pension nominations now. State pension inheritance is governed by marriage law. But private pensions, workplace schemes, SIPs, personal pension plans, work differently. They're governed by one document, the expression of wish form. This is a nomination held by your pension provider that names who should receive your fund when you die. The trustees have discretion, but in practice they follow it. It doesn't go through probate. It doesn't follow your will automatically. It's a separate instruction, and it needs to be current. If your partner isn't named on it, they may receive nothing from your private pension when you die. Not because the law is against them, because you didn't fill in the form. Check yours today. If your circumstances have changed at all, new relationship, previous marriage, children from an earlier relationship, update it. It takes about 15 minutes with most providers, and if you don't have a will, make one. Without one, the rules of intestacy apply. And under those rules, a cohabiting partner has no automatic inheritance rights, however long the relationship lasted. Assets can pass to distant relatives, while the person who shared your home for 30 years receives nothing. You cannot fix the state pension rules. But your private pension and your estate are yours to organize. That's the part that's actually in your hands. Let me bring this back to the two things that actually matter. First, marital status determines almost everything when it comes to state pension inheritance. Not the length of the relationship, not the depth of it, the legal status. If you're not married or in a registered civil partnership, the state pension rules don't see you. That's not a flaw in the system you can work around, it's the rule itself. Second, even when you are legally entitled, the system won't always do the work for you. Contracted out status, protected payments, deferred entitlements. These are real amounts that belong to real families, and they get missed because the administrative process is slow, incomplete, and not set up to volunteer information that would cost it money. You have to go looking. Those two things together, the legal gate and the administrative gap, are where most of the money gets lost. I know that talking about paperwork and pension rules and DWP forms in the middle of grief feels like entirely the wrong thing to be doing. I can't make that easier. Losing someone is hard enough without having to fight a government department at the same time. But I've seen what happens when families don't know these steps, and the financial consequences can follow people for years. A smaller income in retirement than they were owed, an energy bill that becomes difficult, a council tax payment that starts to feel precarious. That second loss, the financial one, is the one I hope this video helps you avoid. One action before you close this tab: check the expression of wish on your private pension. Log into your provider, find the nomination section, confirm the right person is named. If your circumstances have changed at all since you last looked, update it now. It takes 15 minutes, and it matters more than most people realize. If this video was useful, subscribe. There's more to come on protecting what you've built in retirement, and these are exactly the details that tend to fall through the cracks.